So we gotta talk about what is going on inside of Bitcoin right now. There's so much going on right now, and we literally just had the nicest pump that we've seen in a little while. When I say a little while, I mean within the last month. Because remember when we were all the way down here at 49K? Well, now we're at 58K. We reached pretty much 59K. So we're gonna be going over this. Remember, I'm not a financial advisor, none of this financial advice, but let's get straight into it. So look at what we did earlier inside of this week. So we got all the way up here to 58K, almost got up to 59K, almost got to where we needed to. But look, that is a premium price point on the 15-minute chart here for our Chart Prime automated trading indicators. And hey, you guys already know I got to talk about Chart Prime. Definitely go ahead and check that out. Link in the description. But enough of that. We're going to talk about Chart Prime later on. But what I really want to talk about is that pump that we just now had, because not only did crypto pump, we also had the stock market pump. So yesterday we were all the way down at $55,000 in Bitcoin, right? And then we pumped all the way up here to where we are now. So we got all the way up here to like 58.5K. So that was a pretty big pump within a very, very short period of time. And actually, if you look over here at the 4-hour chart, you can actually see that pump inside of real time here. Just look at that all the way down here from our momentum wave bands down here, the support momentum wave bands, and our whole support area down here that we drew out about, let's say, a few weeks ago. We drew this support area down here, and I knew this is exactly where the bulls are going to buy at, because if you actually look, every single time we hit this area, we typically have bullish momentum. Every single time we go down to this area, bullish momentum always comes right after that. So that's why I was betting on it doing the same thing again. And that's exactly what we did. And right now we're at this equilibrium price. We are really trying to get past this Fibonacci retracement level. We're at 58K. We're really trying to get past it and go into our momentum wave bands here so we can build some upward momentum. Now, that is around the premium price point of 64 to 65K. So what this pretty much means is if we pass 60K right here, if we can get past 60K and get inside of this momentum wave band, passing this little Fibonacci retracement right here where we're being held back at 58K and elevating up into 60K territory, then we're almost effortlessly going to get up to 65K. And then right above that is this area up here. Now, I like to talk about this area because this is where one of our wedges is actually. If you actually look at the wedge that we're inside of, this wedge pattern, we've been inside of this for a very, very long time. So let's go ahead and take off our momentum wave bands just to make the chart look a little bit cleaner. And let's go ahead and add on to the Stotch RSI. So if we are looking at the Stotch RSI, right? Stotch RSI is showing us, hey, we're inside of a middle point. Well, that's exactly right, because we are at the equilibrium price point here with our chart prime indicators. You can see where it says equilibrium there, very, very lightly shaded, so it's a little bit hard to see, but we are at our equilibrium price points. So let's say we take off the Stotch RSI, right? And then instead of looking at the Stotch RSI, we look at something else. Now we can look at the prime oscillator for chart prime, which is almost like a RSI in itself, or we can look at, the stock RSI. So they're pretty much almost the same thing, but it's a little bit different when you're looking over here at this. So what I'm really seeing here, like you can actually see where we came off this overbought area here. So in this area, we're a little bit overbought, and that's actually where we are right now, a little bit overbought. You can even see down here how we're going down here on that. So I'm really looking for a little bit of a drop so that we can build more momentum. And the oscillator is actually kind of showing us that we are pulling back a little bit. So you can see where we are coming off that overbought area right there. So we're a little bit overbought here with the oscillator. So hopefully we can pull back just a little bit more. All right. So let's go ahead and bring up the normal RSI, the relative strength index. We're going to go ahead and bring that up. And you can see it's inside of that same area where it just broke out completely. And now you can kind of see it's overbought. So we are in overbought territory right now. Obviously, though, if we break past this Fibonacci retracement, then we're going straight up to these premium price points. But when we get to the premium price points, it's called a premium price point for a reason, because you're buying it at a premium once it hits that price point. and it's probably not the area you would want to buy. See, no one wanted to buy Bitcoin when it was down here at 49.50K. But then once all the institutional investors come in, now all the retail traders want to start buying it up, because when we were back here, people were thinking that it was just going to keep crashing back inside of early August, right? And just to kind of put this into perspective, we can go ahead and bring up the 15-minute chart and just kind of scroll all the way out here and pull this back a little bit. You can see where we went all the way down to 49K. This is where people were like, oh no, we're done, because they seen it go from 70K all the way down to 49K within 1 week. It did this all in 1 week, but the recovery was even better, from 49K all the way up to 58K in the matter of like 3 to 4 days. So the prices can move very drastically here inside of Bitcoin and the crypto market in general. So that's why it's really important to just take a step back. Sometimes you just gotta take a step back, look at the bigger charts, right? Just look at the bigger charts. Look at the daily chart. Like, stop paying attention to like the 15-minute charts, 5-minute charts. 4-hour charts, all right, but the daily chart is really what you want to look at, because when a lot of people are looking at these other charts, they're just seeing all these big drastic movements. But when you kind of scroll out and you look at the bigger chart, you see the bigger picture. And the bigger picture here is on the top of the RSI. You can see how it's crossing. We're overbought on that Stoch RSI. It looks like it's about to pull back. Now, a lot of times what happens is when it actually, tops out up here on the RSI, there's a little bit more room upwards. And you can actually see it time and time again. It tops out on the RSI typically when there is a little bit more room upwards. Now, sometimes it doesn't always do it, like these 2 times here. It did not do that. But remember, right here, it topped out, but there was more room upwards. Topped out right here, but there was more room upwards. And it happens a lot. All right. Sometimes it doesn't, sometimes it does. But this time, I think it actually might do it, because you can actually see how we had that nice big pump there, but you can kind of see there's a little red candlestick kind of forming, but it's having a hard time building up these red candlesticks. So the thing with these wicks is you're probably going to end up seeing green candlesticks coming right after that. You're probably going to see some red candlesticks bringing it down just a little bit, but it's going to be followed by some green candlesticks. And that's probably what's going to end up bringing us up back to these equilibrium prices on our daily chart, and then possibly even a little bit higher to 68K. But like I said, I personally believe we're going to get a bigger drop in the market, but we could have a huge pump. Remember, on the 18th of September, they're probably going to be doing some rate hikes. Well, not rate hikes. They're actually going to be pulling it back, and they're going to be lowering it. So by 50 basis points, that's what they're kind of talking about. But they said if it does it by 50 basis points, then that's pretty much going to be really bad for the market, because it shows like something bad's happening and they need to, pull things back and scale back a little bit. Well, a lot, really. So interested to see what's going to happen there. But for right now, we're waiting for this next move here. If we can break out past this Fibonacci, we're bullish, probably getting up to 68K. But if we cannot break this 58K area and go into the 60K territories, then you're going to end up seeing us going right back down here to our 50K areas, our sub 50K areas, and possibly even down to like 49K, where our discount price point is. So that's what it's looking like here for Bitcoin. And as for everything else, it looks fairly decent. All the other cryptos, they're kind of following in Bitcoin steps here. BNB breaking on the way at 8.2% up in the last 7 days. Solana 4.7% in the last 7 days. So we have some good growth here inside the crypto market. Everything's been going up huge. So hey, let's see exactly what's going to happen with Bitcoin. So I'll let you all know, and I'll continue to follow this and let you guys know what's going on inside the Bitcoin market. Remember, I'm not a financial advisor. None of this is financial advice. Definitely check out the link in the description for Chart Prime, best automated trading indicators in the game. Try it risk-free, 7 days, and use the discount code PRIME20 for 20% off. So definitely check that out, link in the description. And as always, I'll be back with another video.